Understanding how to interpret these market indexes or sector indexes can give you a very accurate picture of how the market or sector overall are performing. When we talk about indexes, we can mean two different things. A market index is a group of companies that together acts as an indicator of that group's performance, which can be an insight into a sector or an overall market. An index fund is essentially a bundle of companies that you can invest in without having to pick individual stocks. So in today's video, we're focusing on the first one, a market index, to help you better understand how to interpret the main indexes and use that information to make informed investment decisions. Market indexes can be defined in different ways, and here's some of the most popular ones. Market cap. This refers to the size of the company and is usually large, medium, or small. They can be grouped by specific industry like finance or healthcare or technology. They can also be grouped by location, which would include companies from specific regions or countries. The three main indexes that you likely hear about on the news are Nasdaq, S&P500, and the Dow Jones Industrial Average. And we'll focus on these three and some other ones today to help you better understand what they mean and how to use that information to help you make informed decisions about your investments. S&P500 tracks 500 of the largest companies across the US by market cap. So large companies by size. This index represents a broad picture of the US economy because it includes companies from various sectors like finance, healthcare, technology, and many others. Because of its diverse representation, S&P 500 often acts like a benchmark for many investors and funds. Next up is the Dow Jones Industrial Average, often referred to as simply the Dow. The Dow tracks the performance of 30 largest U.S. companies across various industries and can act as a key indicator of the market sentiment and investment decisions. The Dow is a price weight index, so the companies with higher stock prices have more influence on the movement of the index. Despite it being small with only 30 companies, it's been around for over a century. So its historic significance and broad representation has been a key indicator of the overall investor sentiment and the overall market health. And finally, let's talk about Nasdaq. This index focuses on technology companies and includes many fast-growing, innovative firms. So if you're interested in technology sector, Nasdaq would be key to understand how the sector is doing overall. If you think of some of the largest companies in the market right now, they will likely have a place in all three or in two of the three of these indexes. So why do these indexes matter to you as an investor? Many investors use these indexes as a benchmark to measure whether their own portfolio is performing better or worse than the overall market. You can find many funds that track these indexes, allowing you to invest in a diversified portfolio without having to pick individual stocks. If you're interested in historical performance, you can look back at these indexes and see how people responded to a specific event in history, giving you an idea of how people felt around that time. In addition to the Dow, Nasdaq, and S&P 500, there are many other indexes that track smaller sectors of the economy. There is Russell 2000, which tracks the small company sector. There is this index that tracks biotech firms, and you can find many other to give you an idea of how a specific niche is performing. By analyzing a market index or a sector index, you can see how a specific company is performing within that sector and then within the broader market. If a company is underperforming compared to the rest of the sector index, this may mean potential issues. If the company is doing very well compared to their sector, this means that they might be emerging as the market leader within that sector. To wrap this up, here's some key takeaways from today's video. There are a multitude of indexes available for investors, grouped by sector, location, market size, and many other characteristics. You can use these to gain knowledge about market performance as a whole or individual sector performance. These are great benchmarks if you want to evaluate how your own portfolio is doing, or if you're looking at a company and trying to decide whether or not it's a good investment. There are three key indexes that you often hear about in the news. It's S&P 500, includes 500 of the largest US companies representing the broad market, and acts as a key indicator of the overall health of the economy. There's the Dow Jones Industrial Average. The Dow includes 30 of the largest US companies across various industries and often represent market and investor sentiment. And there's Nasdaq, which is focused on tech sector and is a key indicator of the tech sector performance. By understanding these distinctions, you can better interpret market movements. A movement upwards will signify investor optimism, and a movement downwards will signify concerns or fears. Thank you so much for watching this video. I hope you enjoyed and learned something new, and I'll see you in the next one.